Hello and welcome to the special podcast series of SLA. SLA completed 20 remarkable years this year, and celebrating this year, we thought of taking insight from the best industry stalwarts. In continuation of the series, today we have Mr. Prathit Bhobe, who is MD and CEO of Tata Asset Management Company. Mr. Prathit has over 28 years of rich experience. Prior to joining Tata Asset Management Company, he was earlier working with ICICI Bank and Citibank. So first of all, thanks Prathit for taking time out of such a busy schedule and accepting our invitation on this 20th year of our SLA FinServe. So thank you so much. So I have a few questions lined up for you. So let's see how it goes. So Prathit, the first question is the mutual fund industry has grown dramatically over last 20 years. SLA has been in existence last 20 years. I'm like, what's your point of view that where are we heading in next 20?
So first of all, Ashish, thank you for having me, and I think congratulations for your 20th year. In our business and in your business, I think you become successful over a period of time, and I'm sure the investors who you've been advising for this period of time would have gained immensely from your wise counsel. So congratulations, wish you the best for the coming years and the next 20 and so on.
Thank you so much.
I think when I think about our industry, and like you said, it's grown immensely in the last decade or 2 decades. One way which all of us tend to think about this industry is we tend to think of, how big is the deposit industry in the country, which is prevailing, and, try to associate that if investors or customers in the past have primarily been doing deposits, there is this huge opportunity of migrating that money into mutual funds. And a part of this is quite true. I'll try to give you an example in which will probably make the point on why I feel there is a phenomenal headroom. Mm-hmm. When I was growing up, I think my parents used to only invest in bank deposits and at best LIC.
Yeah.
I don't think they ever had, first of all, there wasn't as much money that they would have had as surpluses, but whatever they would have had would have primarily been invested in bank deposits and LIC.
True.
To that extent, I think, as we say, what was native to us, what was native to them was really just those products. There wasn't anything else. When I look at myself in the last 30 years, I got exposed to equities way back in 90s. I have, of course, been an investor for a fairly long period of time, but I have seen the change where people like me have, over a period of time, accepted other avenues for investing, and that's how mutual funds have sort of become far more prevalent today. Yes. Now, when I think about my daughters today, for them, I'm realizing when I talk to them, for them, equities or mutual funds today has become first nature.
Yeah.
For them, bank deposits or LIC is not really as acceptable. They've just seen people around talking of investing in mutual funds or in equities far more, than the other avenues.
Very different culture they've brought in.
Very different. So now when you think about them and then sort of project outwards, say 10, 15 years, this is something which they have grown up with.
Yeah.
And it's only natural that for them, this will stay relevant as compared to probably what it was 20 and 30 years ago. Okay. So, hence, when you think about this from a demographic perspective and what is really first nature, I just feel that much more confident when I look at, what this means for the industry. Mm. Now, in our business, given the volatility, you'll have one very good year, one tough year, all of that will happen.
Yes.
But I just think the demographic that we are seeing, we are witnessing, I just think tells you there is that much more opportunity for growth. These, we talk of penetration data, we talk of conversion from the sort of deposits to this, etc., etc. And I just think there is enough opportunity. I don't think there is a problem for this to keep growing as a multiple of whatever the GDP grows at. So hence, I feel quite confident about where we can be. It's, I think in 2018, just to sort of make a point, there was AMFI had asked BCG to project and give a roadmap to the future. And of course, it was at that time we were, I think, 18, 19 lakh crore industry.
Yeah.
I think they had said 50 lakh by whenever. That's happened much faster than what was forecast.
Yes.
So I think it's in a way futile trying to forecast. I think we should feel confident that we're in an industry which is growing. There are several sort of tailwinds which will help us grow. There is financialization, there is younger demographic, there is migration because your other asset classes are not growing. So there are enough sort of tailwinds which will help us grow.
So culturally we are changing.
Culturally we are changing.
Yeah.
That's correct. So I think, it's now, if you were to commission a new report from AMFI's side to say 1 lakh crores, it will be interesting to see how fast do we say we will get there.
Yeah. Few years before it was like whether we will.
Whether we will.
Yeah.
Exactly.
It's now about how fast.
That's right.
That's the point. Fair said. And, talking about mutual fund industry again, what are the key changes that we visualize in times to come when it comes to investors or a mutual fund distributor or even you as a manufacturer?
See, I think like in any industry, there are changes which are ongoing. Now, some part of these changes would be led by customer needs. Some part of these changes would be led by, our own experience as a manager as to what we think we can do better. Some part of the changes would be led by, changes which the regulator does towards the regulations and which makes us do changes into the product setup. So I think the way I think about it is change is inevitable in everything. It's not about this industry. I think there is change all around. As far as we know there is change, we just have to sort of accept it, live with it and move on. Like I said, and there is no one answer as to change being led only by the regulator or only by a customer need or only by what the manufacturer wants to do. I think the reason for change will be, all around.
Yeah.
If you look at, for example, the changes which the regulator has done over the past few years, either with respect to, what we can charge, TER, as we call it, or changes which manufacturers have done from introduction of passives as an industry, or changes which are happening because investors want more sectoral options because they feel they want more exposure to certain sectors, and hence that makes us introduce newer products. These are examples of how there has been change because of each constituent.
Yeah.
Right. So I think there will be change. It's difficult to say what will change. But I just think the industry is dynamic, which is what I see as, change being inevitable, embrace it and, go forward.
In a way, it's like demand-led changes.
Yes.
As per the needs.
That's correct.
The demand will come up.
Absolutely.
And will be changing accordingly. And when it comes to mutual fund distribution, so what role do you see of MFDs in the journey of wealth creation for investors?
See, I think if you just look back, and while terminology wise we now refer to this segment as MFDs, but the introduction of this segment has been right since Unit 64 happened, when UTI came in with US 64, right? They used to have agents who would sort of take this product out. So it's been 1964, 2024. So you're looking at 60 years that this channel has been prevalent. At that time, we didn't have banks as a channel, if you recall. We didn't have what we call as national distributors as a channel. We, of course, had no fintechs then. There was no internet then. There was no fintechs then. So what existed actually was only agency as a channel.
Yes.
So if you think about it, this channel has been through all the ups and downs, all the highs and lows, and has seen evolution more than anybody. and has been the most resilient. I mean, if you lived through all the highs and lows, there is nothing as resilient as, you know, what an agency as a channel
Yes.
has been. To that extent, I think, you know, coming to the role, it just tells me that this channel, which has lasted 60 years, they have served needs of customers differently over this period of time. But, you know, I have a great conviction that the ability of this channel, because this channel, if you think about it, is institutionalized by that individual or group of individuals and has a micro market approach. It's not that this channel will say, okay, I will do a lot of work, let's say in Jaipur, Mumbai, Delhi, Kolkata. It won't happen,
Yeah.
right? Let's say if I'm in Jaipur today, most of SLA's investors
Yeah.
would be in this market.
Roundabout, yeah.
There would be some which are outside, but the larger constituent would be in this
Localized.
market, localized. So to that extent, your ability to sense the needs and cater to those needs is far better than a nationally institutionalized channel.
Okay.
Right? A nationally institutionalized channels has thoughts which emanate from, you know, let's say Bombay, Delhi, Bangalore, wherever the head office is, and then there are local teams which cater to investors. But I think the ability of, you know, being closer to the ground, jaise hum kehte hain, right, or being close to investors and being able to sustain them through thick and thin, because you are here,
Yeah.
they are here, and that's how it will be for years to come,
Yes.
is best reflected in MFD as a channel. And hence, I think their ability to withstand changes, handhold investors over a period of time through the highs and lows of the market, I think is the most resilient. So I feel, if you ask me, their ability, and that's why I said last 60 years, it's sort
Yeah.
of been there.
Yes.
You know, I have no doubt in my mind that they'll be here.
So
looking
MFDs,
ahead.
in your view, are able to provide more tailor-based solutions, more of a boutique-related.
You understand your investors better than
Yeah.
most of the other channels.
Yeah, yeah. I have come from ages where, you know, mutual fund nahi hai,
Yeah.
to a mutual fund sahi hai. You know, a time where, you know, SIPs had to be taught, you know, and today SIPs have become quite a hype. You know, many people tell it has come to the top. इसके ऊपर और कहाँ जाएंगे अब, और कितना इन्वेस्टमेंट होगा? What's your take on that?
You know, और कितना investment होगा is a function of how much exposure you have to the asset class that you're investing in. SIP is only telling you exposure कैसे लेना है. It's a means.
Yeah.
Right? It's not the end by itself.
True.
So it's a very, very efficient means which gets you started on a journey of investing, which helps you hopefully over a period of time get to the end which you have in mind. So to that extent, I think और कितना होगा इसका कोई limit नहीं है. And that's why I started by saying one way we think about it is country में deposits कितने हैं और you know उसमें से हमें कितने migration की opportunity. वैसे if you think about it, the headroom is, I mean, we can still sort of multiply from here.
Okay.
The means for that multiplication can continue to be SIP,
Right.
can continue to be lump sum, can continue to be third tool which comes about through innovation over a period of time.
Yeah.
Wouldn't know. Right now, SIP is prevalent, and SIP is, like I said, I think reflecting on the fact that it's a most efficient way to sort of invest in the market, which is why we're seeing this acceptance being, and like you said, SIP as a word has become so commonplace now.
Yeah.
People say मैं म्यूचुअल फंड में इन्वेस्ट करता नहीं कहते, मैं SIP में इन्वेस्ट करता हूँ. So it becomes such a sort of commonplace as a word amongst investors. So मुझे कोई मतलब the rate of growth that we have witnessed, who knows, you know, how it continues, but I think this will continue because it's an efficient way of investing.
Right. And even from the global perspective, I'm like, does India stand near to that, or I'm like, are we somewhere closer to it, or what?
See, I think if you look at this data of what's the AUM as a percentage of GDP,
Okay.
then I think there is still phenomenal headroom in terms of penetration that India has. India is now in the teens, which was which was single digits earlier.
Okay.
So to that extent, India has of course progressed. But I think, I mean, if you compare it with the developed economies, which is not the right comparison because our per capita is not what you would say is comparable with a developed economy. But I'm just saying that if you want to use that as a metric, then there is still long way to go. Like I said, another, see, that's why Ashish, to your first question कि और कितना बढ़ सकता है, कोई भी ग्लोबल मेट्रिक पे अगर आप कंपेयर करने जाओ एज व्हाट वी कंपेयर विद, वी हैव इनफ एंड मोर हेडरूम.
I've been working on ground and SIP has actually become quite a craze. जैसा आपने कहा कि हम SIP में इन्वेस्टमेंट करते हैं, म्यूचुअल फंड में नहीं करते हैं. Are investors doing all the things right when they are looking at SIP in that way?
So let me rephrase what you're asking, that are investors fully aware that when they are investing through SIPs, what is the advantage, or let's say if there are any pitfalls of doing so, do they understand it well? If I were to rephrase that question, I would put it like this, that if you were to take exposure to markets via mutual funds, inherently you're offering a diversified product which is managed by a professional individual and which by itself provides some comfort. It's a product which is well regulated.
Yeah.
And I think all the asset managers by and large understand this is a fiduciary. You're managing investors' money. It's not your money. And to that extent, I think everybody does this very, very diligently. To that extent, I think the ecosystem provides a great deal of transparency at very, very low cost via mutual funds. Now, the challenge can be that did they understand SIP से mutual fund में invest करने में क्या, like I said, have you understood it fully well or not? Assuming that's not fully well understood, and some part of that must be happening in the euphoria that we are going through, or may be happening, I'm not saying must be happening. To that extent, I still feel that given this ecosystem that has developed that I talked about, inherently will expose you to a product which hopefully will not, give you a very poor experience.
Okay.
Because of what I mentioned. I think at all points of time हम excesses देखते हैं. It's difficult to say यहाँ excesses नहीं हो रहे given what's been, how buoyant the market's been over the last few years. But I think you're getting exposed to, like I said, a product in an environment which is well regulated, well managed. And hopefully, like I said, the customer experience should also be fairly good, as we have witnessed over the last several years.
Yeah. So if they stay along the course over a long period of time, they should have,
a fairly decent experience. Yes.
And in your conversation, you said about, fiduciary responsibility and professional. You have been, in your profession, you've been dealing with interacting a lot with fund managers, both from an equity side and a debt side. I'm like, what's their take on India for next 1 year, 5 year, 10 year?
As fund managers, they have a responsibility to ensure for the product that they manage, they're able to meet expectation as are defined. Each product is different, whether you're taking an exposure to large cap or a mid cap or a small cap and so on. The product construct is different basis, whatever product you choose. And I think every fund manager is very well aware that the expectation is that he does better than the benchmark that is relevant for that product. So to that extent, I think all of them, and which is why I said they're, professionals, are very focused on the task at hand at all points of time. They also know there is this pull and pressure because, there'll be time where the markets become very narrow, few stocks go up. To that extent, you may or may not participate in those stocks at that point of time, which may lead to underperformance or vice versa. So that's something which they're very, very cognizant of all the time. But what I like about fund managers in general is that they get mostly driven by their own conviction.
Okay.
I think their tendency to get carried away or sway because something else is running away where you may or may not have exposure I witness and I have experienced is far and few in between. There are times where that pressure happens because आप underperform कर रहे हो और आप कहोगे कि ये bunch of stocks या ये sector ने अच्छा किया, आपका exposure कम था इसलिए you not participated. They feel that sort of pressure.
Yes.
But I think it's important to create the culture where the individual knows that there will be sort of ups and downs. You have to create the right environment for individuals because, like I said, they're professionals. They know they're constantly tracked. They know they have to deliver for investors. But the idea is not to push them and make mistakes.
Yes.
Idea is that they should be able to best reflect their own conviction in the holdings that they have, and that's the environment we try to create for fund managers.
Yes.
We are willing to give them time. We are willing to understand that there'll be times where they'll do exceedingly well or they may underperform, but it's important to sort of give
So fund
them
managers
that
also go
conviction.
through their own cycles.
They will go through their own cycles. It's inevitable in a marketplace.
It is true. And from their perspective, where do we see India next 10 years, 5-10 years down the
Yes, sorry. So I'll come to that. I think if you look at India today in the context of what's happening with the country, you will probably not find too many fund managers who are negative, on at this point of time for reasons. I think if you really start top down from the government fisc to, let's say, the monetary policy, how it's being managed, or if you come down to corporates with respect to where we are with respect to the deleveraging cycle which corporate India has gone through, or if you look at as per what FY24's ended with your profit to GDP number, we're coming back to what we had witnessed in 2008, which was the best ever. So if you look at it right from top down, right down to the lowest level, you generally see every metric to be very, very positive. There doesn't seem to be anything which would make you not confident about the future. You feel confident about the country growing at a respectable level. We know a 7-8% is very, very healthy for a country like ours, and we think given our setup that we have, it makes us confident that we think we should continue to grow at a healthy clip even in the coming years. So per se, if you think of it, there is very little for any fund manager to say why you shouldn't be positive. I think there is every reason to be positive on India as a country and or the corporate sector at this point of time. I think that recognition that there will be some times where there may be something which happens overseas which impacts us. I think you're a part of a global system. All of us understand that you're not insulated to say कि बाहर कुछ होगा and nothing will happen to India. I mean, you will go through some ups and downs when those things happen, but I think the direction is set. If you ask me, right? The direction is set. We feel confident that we will continue to grow, and we have to sort of live with some possibilities of some upheaval at a point of time, and you have to live through it. We have lived through it, right? I mean, if you look back at last 15-20 years, we've seen everything. You've seen the financial crisis, you've seen wars, you've seen COVID, which nobody would have, one wouldn't even have imagined something like this happening. So we've seen
everything.
I can't say everything. We've seen so many things, and yet we have progress.
Yes.
So I guess there will be events which happen in the future, and one has to sort of look beyond.
So sun is, essentially rising at the side of India.
On the side
of India.
Yes.
Yes. True. Prathit, in last 5-10 years, especially 2014 onwards, and also after this COVID, many new investors have come in, and as discussed, they have not seen many bad times. And COVID was, quite small in terms of the time we had a bear market. So what advice would you give it to them, and maybe what are the mistakes they are making that they should not be doing it?
So this is often said that, I have been in the market for 20 years, I've seen 3 cycles, and the belief is that I am in a better place to live through volatility compared with somebody who's just new to the market and hasn't seen volatility. And which is partly true. I'm not saying it's an untrue as a statement, but I feel that again, I just inherently have so much of maybe confidence in this mutual fund as a product category that I feel anybody who's investing via a mutual fund will, of course, if we go through a cycle, which will happen, the individual's experience will to that extent be a little tougher. But my view is that if you're exposed to mutual funds as a category, the chances of your experience being very poor for a long period of time reduces because of what I said earlier. You're entering a product which is well diversified, well managed, low cost, managed by professionals, and so on. As compared to saying, I will do it myself. I know everything myself. I know what stock to buy. I have done it. I multiplied money. I'm not happy with my mutual fund returns. I have done better. And hence I will start doing it themselves. I think when you say cycle nahi dekha, I worry about this constituent more than somebody who would have said, okay, I'm new to mutual funds, and he will go through cycles also. But inherently his ability to ride out this volatility will be better. The ability to ride out volatility of somebody who's gone in and taken 2-3 stock exposures because of hearsay,
F&O,
and do F&O, do leveraged, will be tougher. So I worry about this segment. I don't honestly worry too much about the segment who's new to mutual funds because of this reason. So I would only caution that, if you know what your destination is and if you know where you're headed, a mutual fund offers you that ability to get to that destination. I'm not saying exposure to equity doesn't do it, but do you have the ability to sort of do it yourself? Make those choices on investing. Do that yourself if you want, but leave it to somebody else to get you there.
Right. I mean, leave it to the experts, I believe.
That's right.
Right. And when it comes to individuals and, 21st century, we're living in a very VUCA world. What is the biggest financial challenge as an individual people face? And what's, in your view, what's the biggest financial challenge?
See, I think the biggest individual challenge is to learn to be patient. If you ask me, all of us are so impatient.
Absolutely.
And, the need for immediate gratification is so high, which I think often makes us make mistakes.
Yes.
It happens to all of us.
So true.
Right? And if we learn to be patient, and it's happened to me over a period of time, and I still feel several things I can do, I can be more patient on several things, but it comes over a period of time. I just think, the generation today probably needs to imbibe more patience. And if they learn to live, with a little bit of patience for themselves, there's no reason why.
There's so many terminology like, YOLO world that we're living in. So I think so instant gratification, lack of patience, I think so is the social media has also, played a
that's right. It puts
damaging
pressure.
Role also, I would say.
It puts pressure.
It puts pressure.
Saying somebody else is doing it, I have to do it.
Yeah. Agree. Could not agree more. And what role does investors' behavior play in his wealth creation?
See, I think investors' behavior is a function of the risk appetite of the individual. I think if you have the ability to take, there are people who will say, I'm willing to accept more risk. There'll be people who will be saying, I am not willing to live with more risk. And that's how your decisions on investing get made, right? You will say, I'm okay with volatility is how you get into equity. You will say, I don't want volatility, which is why you will say, I'll invest in a fixed income or I'll invest in some other asset class and so on. So I think what matters is the individual ready to understand his own risk appetite.
Risk appetite changes.
I agree with you. It changes, and people are not, I would say, honest about it also. because you say property, no risk.
Yeah.
Right? I mean, because you don't tend to market. You invested whatever you've invested, and then you don't market. You don't think of liquidity. You don't think of price realization, whenever you're going to need it, and so on. You don't think of associated costs
Yes.
with it, and so on. So there are so many of these things which you tend to overlook, saying property mein paisa dala is all is well.
Yes.
But when you think of equity, which is a low cost, transparent, liquid product, money when you need it, product, but you are saying, oh, okay, you put in 100 rupees and now it's worth 95, you lost 5 rupees, and you want to then hold a grudge vis-a-vis, let's say, the real
Gold
estate investment.
gold
mein dal diya to kya. So I think you have to be honest about it to yourself. If you are honest about it to yourself and then really measure it from a risk perspective, in that sense, I see no reason why you'll not take exposure uniformly, correctly to all relevant asset classes. I think people are not honest to themselves, which is why
लोगों को पता भी नहीं होता है. I'm like many times that I am discussing, at times उनको पता भी नहीं होता है कि वो risk लेनी क्या चाहिए, नहीं भी लेनी चाहिए. There are so many other things, I guess, which are.
But that defines the behavior. To your question, if you ask me, my view is what defines your behavior towards investing is how do you think of risk. People tend to think
It's
of
always
returns.
risk and return. Exactly.
People think of returns and think of investing.
Yes.
People don't think too much of risk and think of investing.
Whenever I listen to a fund manager, they say risk return parameter, risk return matrix. Whereas when it comes to individual investor, they focus more on return rather than the risk factor.
Yes.
And I think so that's one very important lesson that investors need to understand. It's risk which needs to be managed first and then followed by returns.
That's right.
Right. And we initially, earlier spoke about in a world where the news are all around us. It's a click of a mouse. You have information flooded. How do an investor actually talk to themselves? ये न्यूज़ कितनी देखनी चाहिए, कितनी relevant होती है, कितनी नहीं relevant होती है? How do I assess that? Because I am flooded with everything.
See, I think न्यूज़ देखने में पर से कोई प्रॉब्लम नहीं है. कितनी देखनी चाहिए is a function of how much time you have to spend. If you have 5 hours to spend, 5 hours you want to watch news, watch it, no problem. I think the issue is what do you do when you process that news? One way is to think, okay, मैंने news देख ली, कुछ सुन लिया, खत्म हो गया. There is this thing which we create, the compulsion कि मैंने ये सुनी. Then you start thinking इसका implication क्या, and then I have to act on it.
Yeah, they react.
That's when it creates, the patience part of it that we talked about. So I think it is wrong to say कि news नहीं देखनी चाहिए. I think all of us want to be informed, not necessarily from an investing perspective. You want to be socially well informed. If I'm meeting you and talking to you, I will connect with you on a conversation which will be topical. अगर मैंने कहा मैं न्यूज़ ही नहीं देखता, मैं आज जयपुर आ गया, मैं क्या बात करने वाला हूँ?
Right.
If I don't talk to you about रावत कचौरी सिंह यहाँ मिलती है,
Right.
तो मुझे पता ही नहीं है अगर मैंने कुछ थ्रू सोशल मीडिया नहीं ढूंढा तो.
Right.
So I think it's important to expose yourself to news, but not force yourself to act on every news. So that's what I would advise. You just need to absorb as much as you can and learn not to.
But
act
investors
on everything.
tend to react to it, and that makes them. It becomes difficult for them to stick to a philosophy of long term.
Yeah.
That's where the news, because what to ignore and what to accept is that filter they don't have.
That's correct.
And that's where, I as an MFD, I get asked anything that comes on Insta, anything that comes on any e-paper, Ashish ji, iska kya hai, hame kya karna chahiye? And at times, the answering those questions becomes quite difficult.
Yeah.
Whether I ignore it or should I not ignore it? That was the point. When it comes to news, and you have said, fund manager go through their over performances, better performances, underperformances, and they all go through their own cycles. Here, investors, when you combine these performance cycles and the news that you have, investors tend to chase returns. That's a very typical thing. What's your advice on this chasing return phenomena that investors follow?
I think it goes back to the point we discussed earlier with respect to risk. I think everything that you do comes with its share of risks associated with the decision you're making. Everything in life comes with its own share of risks to a decision. So to that extent, I think anytime you're chasing returns, it's not about chasing returns or not chasing returns. It's about, do you understand what is the downside of that decision? Upside to aap soch ke, that's why I said investors look at returns more than risks. You're chasing returns because aapko bhi lagta hai ye 100 ka 120 hoga. I want that 120 very very quickly. नहीं तो मुझे 120 मिलने में 3 साल लग जाएंगे, ये अभी मिल रहे हैं, which is how you chase returns, right? But वो 120 chase करते करते the possibility of seeing a 60 also exists, right? And which is the thing which you need to be aware of. It's the same thing we spoke about, patience, risk, etc., etc. So I think chasing returns is inevitable with people who get sucked in. It happens. I feel people like yourself do an outstanding job in terms of calming nerves when this happens, right? It's about calming nerves.
Yeah, true.
So I think you guys do a great job. And
there was one investor, retired investor, Prathit, who would come to you. He came to me, and this guy is like, Ashish, I am retired now, and I want a very safe investments, and I don't want all those 40% plus return investments. I'm looking very safe, steady 20% return per annum. And I was just wondering, अब मैं उनको क्या जवाब दूँ that 20 is actually safe or is unsafe. So anyway, so that's how things goes. And maybe one liner, if you can talk about what should someone in their 20s look at, 30s look at, and someone who is in 40s, what that message from your side would be?
My honest message would be that, see, I think what matters in investing, in the context of investing, is not how soon you make money or when you make money. I think the beauty is about knowing that you need to make money consistently over a period of time. So I think some part of what we talked about, risk or patience and so on, I think helps you to deliver consistent returns over a period of time. It's important to think about delivering over a period of time rather than saying, okay, this 100, I have this opportunity to make 20% return in 3 months, the point on chasing returns. Rather than say, okay, can I just, like that Hero Honda ad, fill it, shut it, forget it. Can I just put money which I know over a period of time will sort of consistently compound? So you just have to be patient. You have to know, in this business of investing, it's not about making the right choices only. It's about avoiding the wrong choices also.
Avoiding mistakes.
That's right. Avoiding mistakes. So I think both of them go hand in hand, which helps you deliver consistent returns. So I think it's about being patient to realize consistent returns rather than play a T20 match ke aaj, 3 sixers mare or whatever.
Yes. And I think so you have answered my next question very efficiently throughout this. My question was basically, what are the mistakes that mutual fund investors make? And I think so from all the discussion we had, I think it's very clear about what comes out is that patience. Having a patience is the key. And one of the biggest mistake that people do is, when it comes to mutual fund, there's a lot of liquidity, there's a lot of news flow around, they tend to become impatient. I guess that's what...
That's right.
So
absolutely.
That's probably the biggest mistake that investors. And if you really want to create wealth, as you said, the same 11 people, if they play T20, they probably get out at 120. If they have patience, they can, and they play test match, they're probably going to make 500.
That's correct.
Yeah. So I guess, the message is very clear. So Prathit, thank you so much for, giving us such a great insight and, from your experiences. But before we conclude, there is some, fun element to it, into this entire thing. And there is some rapid fire question that we have. And so maybe, I want Prathit to be absolutely quick and fast without probably thinking too much about it. And let's say what comes out of Prathit, So what is that one lesson that foreign investors should learn from Indian investor?
Fun element, right?
Yeah,
Okay.
whatever that comes in your mind.
Maybe they should learn to do SIPs.
Oh, that's wonderful. I get it. And what is that one lesson Indian investors should learn from foreign investors?
See, I think you have to be true to your asset allocation. I think that's the job which foreign investors do exceedingly well. They're true to asset allocation most of the time, which I think Indian investors sort of.
Okay. Now you need to rank this in terms of preferable investments. So real estate, gold, equity, bonds.
Equity, equity. But but on a serious note, equity. I think real estate, because everybody needs to have
Yes.
shelter, and then bond and gold.
I loved your answer. Index or active?
I think different strokes for different folks. So I don't think there's one answer for everybody. There'll be people who will want active. There'll be people who will want index.
Okay. FDs or G-Secs for next 3 years?
G6.
G-Secs. Wow. Direct stocks or mutual funds?
Again, different strokes for different folks. I think I don't think it's one or the other. There will be a point of time where you might want to take a direct stock exposure. But even with what I said, I think it's good to take some direct stock exposure as far as it's not overbearing your portfolio. But by and large, it should be mutual funds.
Okay. So thank you so much, Prathit, for even answering those candid and quick rapid fire questions. It was really amazing talking to you, and for me also, even after 20 years, there were a lot of learnings from this conversation we had. So from entire team SLA, thank you so much for taking time out and coming all the way to Jaipur to have this session. Thanks a lot.
Thank you, Ashish, and wish you the best for the future.
Thanks a lot.